Jessica Smith with the Key Group at Epic Realty and Austen Smith, no relation, but welcome. He's from Barton Creek Lending Group, and I'll let him introduce himself. But just wanted to hop on and chat about what's going on in the market in our local area. Thanks for.
Absolutely. Absolutely. Thank you, Jessica. Real quick, Barton Creek Lending Group, we've been around since 2004. So this is our 20th year. This is my 19th year of being in the mortgage business. And so we are locally owned. If you look us up on Google, Zillow, any of the major review platforms, we have over 1,000 five-star reviews. And, a lot of times people ask me, well, why you? Well, we just let the reviews speak for themselves.
Yeah, I'd say that's awesome. Well, yeah, it's kind of a weird time. I know there's a lot going on, and I've been hearing different things in the news and depending who you talk to and all of that. And the market here, it feels more sluggish than we're used to. It feels, and well, just even the statistics show houses are sitting on the market longer. There's more homes on the market. So we're kind of in this weird time with rates still a little bit higher than we're used to, some uncertainty with the election coming up, and maybe an iffy job market. So in Austin, sales are slower, demand is down. Prices are staying high though. It's kind of odd. I feel like sellers are trying and maybe just going off the market and waiting. Everyone's not as motivated. That sense of urgency and demand isn't there. Maybe just waiting until the spring. I don't know. So I really just wanted to get Austin's take, and then at the end, we'll wrap up with really what this means for you if you are looking to buy or sell in the next, 0 to 6 months, kind of how we can help you navigate that. Austin, what do you think? I know we're kind of expecting the feds to do some things. What's your take?
You know, that's the number one question I get almost daily from whether they're clients or other real estate agents on, hey, Austin, what's going to happen with the Fed? Fed is, Fed is, indicated that they are going to lower rates. Now, does it mean that they're going to lower interest rates by a quarter? Probably, most likely, but there are some talks that they might decrease it by almost three-quarters of a point. I don't think that's going to happen, but but the question is does this affect mortgage rates? Not directly. Mortgage rates are tied to the bonds, which is tied to the stock markets, and now they do complement each other ultimately. And because both are tied to inflation. I mean, the Fed's trying to they rose rates to bring inflation down. Now their plan is working, so everything is kind of following suit with that. But I agree. I mean, house prices are still staying relatively high. I mean, we're seeing about an average of about, I think it's a 4%, 5% price reduction from list price to final sales price. But sellers and agents have started becoming more and more aware that in a market like Austin, where the interest rates are where they're at, you don't necessarily need to reduce the sales price by $10,000, $15,000 because people don't have $450,000, $500,000 to put down on a house and buy it in cash like we did 2 or 3 years ago. And so what they're doing now is they're talking about the incentives. Hey, we can offer, $15,000 towards your closing costs to get you a permanent buy down, temporary buy down, or closing costs, or all of the above. So,
Yeah, and
that's, oh, go ahead.
yeah, there's good news and bad news about price stability. We're not just gonna snag crazy low deals, but also if you're buying, I feel like we're a little bit more insulated and our market's pretty stable. Like, I don't think we can expect really huge, bubbles to burst or declines either. I don't know. It seems to just be pretty stable. I do think that there's some pent up demand and some people are waiting and in a house, kind of just waiting to see what happens with the election, see what happens with rates. So hopefully we'll see a little bit of a increase in demand when the rates go down a little bit, maybe next year.
I mean, we're already starting to see rates come down. We're starting to see rates start. I mean, typically what happens is, when the Fed releases their notes as what the conversations were, the stock markets, will start, and the bond markets and the mortgage companies will start looking at that, and we'll start, I'm like, oh, okay, this is what they're going to do. And so they'll start lowering interest rates in anticipation with the Fed at least lowering the rate by a quarter. And I mean, so you mean,
Built in
so
already.
yeah, so it's very much built in already. And I was talking to a client last night, and you know, he came to me with a contract and said, "Hey, I've got a whole bunch of money coming from the seller. What can I get?" And we're able to offer him a 4.875% interest rate on an FHA loan, 3.5% down, and the seller's paying for all of his closing costs. In addition to that interest rate being where it's at, so he's only had to come to closing with just his down payment.
That's awesome.
So I mean, and so there's a lot of availability. I mean, that's one of the things that I always tell people: don't believe what's in the news, because the news is just going to talk about the negative. They're not going to talk about the real world. And a lot of times is they're 2 or 3 weeks behind us
Mm-hmm.
and what's where things are at today. So, I mean, always talk to me or any other mortgage professional about what's going on in the market today with interest rates.
For sure. Yeah, that is awesome. And it can be tough out there right now for sellers. There's a lot of homes out there. They are selling, but if you need to sell, I would be really careful and um, just really, you might have to be a little bit more aggressive with your pricing and your marketing with higher inventory and longer days on the market, just in order to be competitive. And we're back to more normal seasonality. So it might be spring before demand really picks up. But
Hmm.
overall, I would expect the process to take a little bit longer. And like you said, be ready for buyers to request some concessions. Um, and on the flip side, that's good news if you're a buyer. There's more opportunities, and you can find some pretty motivated sellers that are offering to help with some of your concessions for your rate, for your closing costs, all of that. So it could be a good time to start looking while inventory is still pretty high. What would your advice be for buyers?
For buyers, I mean, you look at what rates are today. If rates are at, if you're an FHA client, interest rates are going to be in the mid to high fives. And so look at what that payment is and versus what that savings or where you think rates will go. Will
Mhm.
rates get back into a consistent low fours or mid fours? I personally don't think so. I think we will start seeing them in the high fours or low fives. And but at the same time, you have to look at the cost of waiting. How much time are you throwing away money for paying rent someplace? And two, if you wait for interest rates to come down, so is everybody else. When rates start coming down, inventory starts coming down, and you'll start losing a lot of incentives.
Yeah, no, that makes sense. And it is ultimately, in the long run, probably better to secure the asset at that cheaper price if you can negotiate a great deal or, save, keep some money in your pockets with some concessions. Absolutely. Well,
Mhm.
thank you so much
Absolutely.
for your 2 cents and for joining us. And I appreciate you. And maybe we'll be back next month with another update once we
Let's do it.
get through this meeting coming up and kind of see what the overall national economy does and how it affects you. But yeah, if you guys have any questions about lending rates, anything in general, it always depends on your situation and your location. So feel free to reach out to either Austin and I, and we'll drop his contact information below. Thanks,
Awesome.
guys.
Thank you, Jessica. Really appreciate it.
Yeah, thanks, Austin. Have a great one.
You too.